And welcome everyone to the webinar, How to Build a Successful Data Analytics Career in Retail Banking and Finance, presented by Simplilearn. I'm your host, Stuart Creek. I'm a marketing manager here at Simplilearn, and my guest today is a thought leader in data analytics, Abhishek Singh. A bit more about him in a moment, but first a few notes on how to participate in the webinar. Your Q&A button has the question mark on it. Please use Q&A to ask questions that we will answer at the end of the webinar. Abhishek, can I ask you to mute yourself for a moment? There we go. We'll ask the questions of Abhishek at the end of the webinar in the live Q&A session. So put your questions into the Q&A box through that button. For live chat during the webinar, use the speech bubble button. And if you direct your question to all, or your chat to all panelists, we'll all see it. If you send it to host only, Abhishek will not see it, so please use all panelists. We're also going to do a few polls during the webinar. And the first one has two questions on it. What's your current job title? And how are you feeling today? On a scale of thumbs up for feeling good, thumbs down if you're not feeling so well today, and in the middle. And we'll leave the poll open for about another 45 seconds. And we're getting a lot of responses coming in. So you have about 15 more seconds to put in your responses and hit submit. And let's see the answers. It's a fairly rounded group. Some managers, some students, some people in operational roles, and some other folks. So we hope this will be a very informative and interesting session for you. I'm going to introduce Abhishek now. He is the Chief Analytics Officer for Lendingkart with over 19 years of experience in consulting and retail financial services. He's co-founder of Infinite, and his MBA is from the SP Jain Institute and Bachelor of Engineering from NIT Surathkal. Welcome, Abhishek.
Thank you, Stuart. Good evening, everyone.
So, Abhishek, data is, as we've discussed before, very, very important, very exciting aspect of the digital bank. And I think what we're hearing now is a little bit of feedback from your side. I'll let you go ahead and tell us about what it is that you do and how you view data in this sector.
Sure. So I think I'll give a bit of background in terms of how I've seen the entire data and analytics piece grow in India and in countries abroad, as well as how it's impacted banks and financial services institutions. So I think over the course of my career, I've heard a lot of terms being used for database decisioning. So, you have heard about analytics, data and analytics. You've heard about business intelligence, decision sciences, big data analytics, and now machine learning and AI. Right? But I think over a period of time, as we have heard these versions of data and analytics evolve, there are three pillars to the entire database decisioning activity that have remained steadfast. Um, The first one has been the actual data and analytics, which is about making sure you have quality data available in a timely manner and it is accurate. The other is obviously insights that get derived out of it. The second part of it is technology, and technology has played various roles. When I started my career, technology was more about picking up the analysis that was getting done and hardwiring it into the systems to ensure that there was a seamless integration of analytics into business. The third part of it, which is very very critical, is really first-hand business knowledge or domain knowledge. And the three together then create an entire framework which allows for data and analytics to be implemented. I think the first two pillars, which is data and analytics and technology, they have been converging or dovetailing into each other for a very long time. When I started my career about 20 years back in banks, SAS was really the default analytics tool available in the environment. Then we had a little bit of the technology revolutions rev, and we had IBM coming in with SPSS. We had R, which had finally gotten acquired by Microsoft. Then we started hearing a lot about big data, and the moment big data analytics came in, the traditional tools like SAS and R, they started integrating seamlessly with Hadoops and clusters and whatnot. Um, and now we obviously have a much more integrated and tightly coupled data plus analytics play, which is essentially around whether you use Python or whoever is knocking on the door next, which is Julia, right? Um, Again, about 20 years back, we were creating a lot of pivot tables on Excel sheets, and it's only SAS was getting used only for finer classification when you wanted to create multiple models. Um, Today, when I look at it, Excel-based analysis is completely passing. I don't even hear about it. Um, for banks, analytics was only about using internal performance data of the borrowers and combining it with demographic data that was available in the environment and creating multiple insights out of it. Then came credit bureau, and the entire world of credit worthiness checks completely changed. Today, as you look at it, you have multiple sources of data. You have SMS data, call data records, you have bank statements coming in, you have digital footprint scores like Trust and Social coming through. Credit Bureau has created a complete niche for itself. Internal performance data continues to add value. And I think all of these together have now created a very, very comprehensive and exhaustive database decisioning framework that has become available. Um, However, so therefore you have seen quite a bit of change on data and analytics as well as technology. But I think the third pillar, which is business knowledge, first-hand business knowledge, that continues to be the core of everything. So you have newer technology, you have newer analytics techniques like whether it be random forest, whether it be XGBM or anything else that comes through. Finally, unless have the right amount of business knowledge and the right context for implementation of analytics, it remains ineffective. And therefore, I mean, just to summarize, a lot has changed, a lot has evolved, but a lot remains the same. You still need to know your numbers. They need to be at your fingertips. You need to have sniff tests coming through whenever you see any kind of insights or analysis coming out. Two, the use cases for implementation of analytics needs to be very, very clear. And I think three, which is last but not the least, is that whatever analytics you do, it can't just remain theory. It needs to impact either your P&L or the balance sheet. And I think that's where I see the three pillars. And while they have changed and morphed themselves, they continue to remain relevant. Back to you, Stuart.
Yeah. So we talk about the trends of technology, for example, which, as you said, went from specialist tools like SPSS and SAS. Um, how how has that made the power of analytics more democratic in this evolution? How has it made it more available to people who aren't specialists or hadn't been specialists before?
Right. So I think as with any implementation or any technology evolution, I think it had its pros and cons, right? So a lot of data became available. People started basing their decisions on a lot of data. You didn't have to remain a specialist who only understood modeling to start using data. So you created multiple dashboards to understand what's happening in the portfolio. You started analyzing. There were slicing and dicing tools available, like whether it be Cognos, whether it be Neo, whether it be Tableau, right? But what started then happening was users began creating their own reports, and therefore, from a single source of truth giving you one particular output, you started having multiple versions of the same slices and dices. And finally, it's about definitional constructs, right? Unless your definition of, let's say, an approval rate or a delinquency, they remain consistent in the organization. If that doesn't happen, then you start having multiple versions of the truth, and none of them are speaking to each other. So I think it has had its entire run. It went to truly democratic for a very long time. Then people started realizing that people were analyzing to death, and therefore people pulled it a little back. And what started happening was you had a standard set of frameworks which started getting implemented. Over and above that, ad hoc analysis, which required a lot of insights, that started coming back to the decision sciences team. And that's the construct that you see today. So when business or functional units want to create their own analysis, they use all the standard outputs that are available. They use the standard data sources or single source of truth that's available in the environment. They start using that. But when it comes to any high-end analytics or when it requires deeper insights, they always fall back to the specialists, and therefore the specialists still continue to occupy a place in the entire system.
It's an interesting point. As it happens, I'm old enough to remember when people said executives will never use personal computers because it involves typing and that's a secretarial job. Um, and of course, the power, as I mentioned, the democratization of having your own spreadsheets instead of going to the IT department was too powerful for people to resist. But as you said, giving everybody the tool doesn't mean you're giving everybody the skill to interpret. And that leads to a question. Um, one of the purposes of data is well, main purpose of data, as you described it, is to inform business decisions so that you can improve P&L, improve the bottom line, improve the balance sheet. And that means that specialists have to be able to communicate to business generalists. Um, how do you see that process working in the current age?
So I think in the olden days we used to talk about business analysts, and we used to talk about techno-functional business analysts who could understand the technicalities of data and analytics, but at the same time knew the business lingo, knew business terminology to be able to have a two-way conversation. I think, as with any other terminology, now it has become analytics translators, and you have narrative analytics coming through, wherein it's not just important to create a lot of information. You have to create one more layer, which is insights. You then, on top of it, need to create recommendations, and these recommendations have to be steeped in analytical constructs, but they have to be simple enough for business to understand. So I think, as with any effective strategy, the idea always is to make it as comprehensive and as complicated or as complex as you want in the background, but the communication and the narration has to be simple enough and implementable enough for it to have an impact. And I think that role is still extremely critical. As I said, initially, that database decisioning is about the three constructs in terms of technology, data and analytics, and business knowledge. And I think the best or the most effective analytics resources that I have encountered have always been people who understand all three, and therefore are able to portray it in the right manner, understand and evaluate when a particular analytical construct needs to be implemented, and then are able to go back, talk to the technical team, get it done, and be able to push back and come back to the business users with the right results.
Yeah, we had a discussion with a gentleman from Salesforce whose field is AI, and he was talking about how um, the data analytics problem flows in two directions. One is from what is possible to learn from the data specialists, saying to the business people, this is what we can, these are insights that we can derive from the data available. But it also flows in the other direction, which is the business people saying, these are the insights that we need to have. What can you tell us from the data that's available? So um, I think that's an interesting area. Do you have some insights into that?
So yeah, I think a lot of places where I think it's a two-way flow. So for example, you know, I was doing some bit of collection strategy last week, right? And the whole idea was, given India was going through the entire moratorium period, we are coming off moratorium on 1st of September or yesterday, and you need to capacitize your collections workforce to the right amount and geographically, right, for it to be effective. And therefore, it needs a whole lot of predictions with respect to how many bounces you're going to see on the portfolio, which buckets, which geography, whether it's a hard collection, soft collection. There is a whole lot of analytics that you need to create to get to the answer, right? And my collections head actually came to me and said, Abhishek, I think this is my understanding of business. I think this is the total number of bounces that will happen, and this I think is the overall construct wherein there'll be some bit of telecalling, some bit of geographical spreads on the field collectors. Do you have data available with you which allows me to triangulate and validate my assumptions, right? So it's a classic business problem. There is a lot of gut feel involved. People have some sort of an understanding basis, their understanding of business as to what needs to be done, but they need validation from data, right? What we did was, we typically have asked for a lot of bank statements from our customers, and Lendingkart typically does a lot of bank statement based underwriting, and and therefore that became the de facto model for me to then go back to these bank statements, get the latest ones, and then try to understand, how has the serviceability or the ability to service a loan gone down in the times of the pandemic for the customer, right? And then we kind of recirculated it and we figured out, therefore, if the serviceability is going down, what is the expected bounce rate on my portfolio? Then we cut it by various buckets. We looked at net flow rates. And, funnily enough, we realized that the collections head was very, very close to the actual number that we got. So, while we do a lot of data and analytics, I think the feel of business still remains very relevant, and it's always a two-way flow. There are a lot of analytics outputs that we create on our own, but then again, it also flows the other way around.
Um, Let me mute you for a second so we have the echo off. There are a couple questions actually coming in through the chat, and I think I'd like to, if I may. take a look at a couple of those. Uh, one, one, I think we'll come into the subject a little bit more detail later, but one person asked, what are the basic needs for somebody who wants to enter the industry as a data scientist?
I think two parts to the answer, honestly. One, obviously, you need to have a problem solving approach to things. So as you look at a problem that is coming to you, you need to be able to structure the output very clearly. You need to first be able to cut the problem into multiple parts, create a structure around it, be able to answer that with the help of data and analytics. Obviously that will require a lot of technical skill sets. Some of it could be pure, just being able to pull data from a particular database, then put it into a Python or whatever, create a script, create the right sort of data summarizations on it, and then be able to present it. I think that's the first skill set. The second skill set is you need to understand the context in which you are solving the problem, right? So there is one part of it was just pure technique. I think the second part, which is equally relevant, is, as I said, a domain knowledge, right? So if I'm solving for, let's say, a credit cards business, I need to understand what are the drivers of the credit card business. I need to understand the terms and terminologies. So, I shouldn't be scratching my head if I see a credit card problem and it's talking about a, hard revolver or a soft revolver, or it's talking about delinquencies, or it's talking about never use, never pay, or spends, or any such thing, right? So I think you need to have both of them very, very focused. So what I would suggest if you're starting your data and analytics career is be very, very sharp on the technical skill sets that you want to develop. Make sure that you have a structured thought process, but also more relevant when you are approaching a particular industry for beginning your career. Be aware of some of the parts of the industry, right? It is very, very helpful. I mean, one of the cribs that we always have with our education system today is that they teach us a whole lot, but what they don't teach us is, for retail banking, what are the 20 critical things I need to know? If I need to go into retail, what are the 20 things that I need to know? And I think the moment we start having that business focused evaluation metrics available on the academic side, or in terms of even Simplilearn packages, right? The moment you have very specific concise packages on what needs to be known for a particular industry, I think that becomes very relevant.
That's interesting because that echoes a piece of advice that was in a book I read many years ago about job interviewing, and it cited the example of somebody going to a sugar manufacturer, and there were two candidates, and the one candidate had a lot of technical knowledge about the function that they were going to do in this particular department. The other candidate, however, knew that you made sugar in this particular case by harvesting sugar cane, breaking it down, extracting the cane juice, uh, distilling, or refining that. And so he had a great deal of information about, or knowledge about, the industry, even though maybe less technical knowledge about that particular job function. And of course, that industry knowledge is what helps you get hired, because you can always refine your technical skills, or upskill yourself. Um, but to start in an industry with the basic knowledge of the industry gives you a leg up, because you don't have to be uh, subject to as much intensive training on just the basics of the industry. So what I'd like to ask is, you had mentioned your recent challenges in using analytics to see what the impact of the pandemic has been on your business. What do you think the impact of the pandemic has been on consumer behavior? And second question, what has the impact been on how you conduct data analytics within Lendingkart?
Sure. So, Stuart, I mean, in these times when it is a pretty tragic time, right? A lot of businesses, a lot of people's fundamentally their financial stress has changed, and the way they were financially stable yesterday has completely taken a beating. Right? I actually lend in a particular environment where lending card typically does loans only for micro and small SMEs. So therefore, we are actually lending to the most stressed segment in the current scenario, because while you and I typically get our paychecks still, these are people who are not able to open their shops during the pandemic, and therefore, their businesses have fundamentally changed. So what's happened is, you are facing a very typical scenario where your prior performance, even on my book, is not guaranteeing that you will continue to perform well. Secondly, in terms of credit worthiness checks or underwriting, checks, um, my credit models are not just changing on the calibration, but they are also changing on rank ordering itself. So if I had done a relative rank ordering of customers basis their risk, and I had created A, B, C, D, E, F, today it is not necessary that an A ranked customer will continue to perform better than a B ranked customer, right? And that creates a completely new problem, right? Because as you are coming out of pandemic, you will obviously focus a lot on collections, but your business also needs to start growing. For business to start growing, your models have to start working again, because otherwise you go back to manual underwriting, which is not necessarily the right thing to do. Um, Now, at Lending Card, we have been slightly fortunate, because what we have always done is we have looked at customers' application data, bureau score, and we have also looked at bank statements. And typically, a 12-month bank statement we are able to use to predict what is the ability of a customer to pay. Now, that bank statement today, even today, reflects the right picture, primarily because we had demonetization in 2016, and because of that, a lot of the transactions have gone digital and therefore are available on the bank statements, and even the payments, etc., have gone digital. So my entire net debits, credits, average daily balances, everything is reflecting the right picture. So we are still able to understand which customers are undergoing a severe stress, which are not. But I think it again provides a wonderful opportunity also, because you can fundamentally relook at your models. You can get in newer sources of data like bank statements to start evaluating more. And you can get, if not bank statements, any other imputation of income, which allows you to very clearly, find out the financial stability of a business or a person, and use that to create your models. But I mean, honestly, the world has changed completely, and creditworthiness itself has completely taken made a change.
And what about the behavior of consumers and businesses on the other side of the table from you? What have you observed changing over this period?
So I think when you lend to a borrower, you typically always used to look at two tenets. One was the ability to pay. The second was intent to pay. I think the intent to pay still remains strong. It's the ability which has changed. I think to the entire mix, given that India had undergone a 6-month moratorium period, um, there is a third tenet which is now getting introduced, which is the habit to pay. So, getting the customers to make them remember there is an EMI that is due and therefore they need to get back into the habit of that payment, that is going to be one of the most fundamental challenges. And what will also happen is this habit to pay will start reflecting in the way people underwrite, right? So, for example, a customer who had taken a moratorium vis-a-vis a customer who had not taken a moratorium, they will be viewed separately. So, I think you'll now suddenly have three tenets of underwriting: ability to pay, intent to pay, and habit to pay. I think we have been very fortunate. We have been very closely communicating with our customers, even the customers who have been unable to pay and have taken a moratorium during this period. I think the intent, which is really the driving force of any collections capability, that remains very strong. So collectors, so our customers have continuously told us that yes, we are undergoing a stress, but do not worry. The moment my business opens up, yours will be one of the first loans I'll pay. So don't worry about it. And I think that really puts us in a good frame of mind as we get into September.
This would be a good point to do another quick poll. And this one has to do with what data science skills people currently have. Um, so here's a sampling of a few different categories. And if you take a moment, just let us know what skills you currently use in your work. And of course, you can select more than one. And again, we will leave this poll open not for 5 minutes, but for just about another 1 minute from now. And as I'm looking in, the one clear trend that's showing up is that big data is not part of most people's equation right now, but we'll leave it open for about another 15 seconds. You have a chance to make your selections and hit submit. All right. And you can see that people who answered said data analytics is the primary skill that they use. Business analytics, AI, and machine learning are also important. And we'll come back to a variation on this question later. So I'm curious to know, with the advances in analytics and technology, with what people have learned about through various iterations of using the analytics for business decisions and then driving that to ask better questions, what new areas have opened up or what new applications do you see uh, becoming possible because of the power of data analytics?
So I think let me take a stab at it from a banking and financial services perspective, given that that's closer to my heart. Um, I think in terms of new areas, I think what will typically start happening is there has always been a lot of analytics around the initial customer acquisition, right? So, what kind of SEO optimizations to do to get the customer on your book or on your website? How do you work on the funnel further to make sure that the conversion into a terms and conditions or a dispersal is higher, etc., etc. I think one of the pieces which has been lagging behind in the financial services industry specifically has been collections analytics. And I think historically, people always knew that you are never in the business of lending, you are in the business of collecting. Because today, if I stand with 100 rupees on the road and I say, who wants it? And if I'm not asking back the money, then anybody and everybody will pick it up, right? But the moment they know that they have to pay it back, that's the trick, right? Understanding which person I need to give this 100 rupees to so that I'll get it back. So I think what has fundamentally happened is, given the entire financial stress that has happened in the system, collections has become of utmost importance. And collections always used to be a lot of manual effort. Collectors were on spreadsheets. They used to call the customers on their mobile phones. Never have feedback loops for coming in. there were no analytics, there were limited amount of, collections analytics saying which customer will flow forward, which customer will flow backward, and so on and so forth. So I think that particular area is going to be completely full of analytics and analysis right now. And I think it will continue to be the case. The second part that I see analytics coming through big time is there is a whole lot of data on the phone today. Now, what's happened is, we do store a lot of applications on our phone, and we give access to these applications, access to every single data point on my phone to these applications. But what does not happen is, if there is a lender's application. So, for example, if there is a Lendingkart application, even the people who take a loan from Lendingkart, about 5 to 10% will really download that application, and therefore the ability of a lender to use data that's lying on the phone, which is very rich, is very limited. I think the second part of analytics, which is going to be really, really important, will be how do I drive adoption of my application onto the phone and therefore be able to get the right and regulated information out of it. So I think that's the other part. There are many SDKs, there are many codes which are available, but I think where it's falling short right now is people are not downloading your app enough to be able to get meat out of it. So I think that's the other part where analytics on financial services will increase. The third part is in the adoption of ML and AI. So what's happened over a period of time is there are two very divergent views on using ML and AI. Uh, the moment you're talking about revenue generating activities, people are happy using unsupervised algorithms which have learned over a period of time. And even if there is a drop, it's only a drop in the revenue, and that you can keep correcting. But the moment you talk about unsupervised learning or an algorithm available on the underwriting part of it, the risk managers take a step backward and they say no, but here we need to control it, we need to ensure that not too many people are going bad, etc., etc. So I think the adoption of ML codes and unsupervised learning on the underwriting side has been very low. I think that's the other part which will go up. The last part will be the entire AI piece, right? The entire chat bots or voice bots. MetLife, for example, in Europe has taken over a bot which effectively can talk to you like a normal human being. And what it does is it takes away your entire service delivery platform from a human and a human capital intensive output mechanism to a replication of technology. And the moment sentiment analysis, understanding of the tonal behaviors, etc., becomes better, that becomes my scalable option, right? So I think that's the other part where we will see on customer service, where we will see a lot of adoption.
Little mouse problem there for a second. Yeah, that's a fascinating aspect, both in terms of evolving trust for ML and AI, where people have to be convinced that the machine can do it as well as a person, and they'll probably end up finding out that the machine can do it better in a lot of cases. But the other aspect is, the impact of AI in scalability of service, where you don't have to fill as many seats in a call center if the AI can handle much of that work. And as you said, with sentiment analysis, if the AI is smart enough to know when the customer is very angry and how to treat that. I had a question in the chat which had to do with the timing of data and the timing of analysis. And can you comment on whether different fields require real-time data collection, and whether that's a cost-effective thing for them to do?
So I think one thing that we all need to remember is we don't have equal data. So the cost of data keeps increasing as you get nearer to real time, right? So what you need to create as a data strategy when you're talking about refresh frequencies, etc., is to clearly identify which part of your data do you need real time. So, for example, for banks, one of the critical pieces that they need to know is, are their ATMs functioning? Are the ATMs running out of cash? Right now, that is absolute real time requirement. On the other hand, the bank does not really need to know how many total savings accounts have been booked absolutely real time, because it's not a competition, right? You can have a 2 hour delay, you can have a 4 hour delay, some of them with a T-1 delay. So I think it is very important to know that the cost of data increases exponentially as you get to real time. And therefore, identification of a right data strategy to know which data is critical, which is non-critical, what can take T-1, T-2, etc., is very critical. And that's how most of the banks today are typically performing.
Yeah, we have a question about whether it's better to start from the perspective of studying AI and ML as a way into modern practice of data science, or whether you start from the data science and analytics side. And I suspect I know what your answer might be, but I'd like you to comment on that.
Um, it's an interesting one because I think one is more a technology view, while the other is more an understanding of the context view. And to my mind, it has to be a combination. I don't think we are walking away anytime soon from the fact that you do need to know your data, you do need to understand the basic practices, you need to know how to evaluate data quality, missing value fillers, and whatnot to be able to create the right and relevant outputs. At the same time, I think this is a very exciting time because technology is literally changing every month, right? Every new month that you wake up, you suddenly realize there's a Julia who's knocking on the door, there was Python, 2 weeks back, so on and so forth. So I think it is important for you to take one technology and really understand it well. Because what happens is that the implementation of that technology is what will matter in the end. And for that, you will need to know that technology and the language well, and you will need to understand the context well. Without both of them being in place, you will always struggle. So I think it's a combination that you need to create. And if you're a fresher who's getting into a new interview, it is okay to be heavily oriented towards ML and AI, or heavily oriented towards just a Python script or just a SAS script, but have a working knowledge of the context to which you're walking in. And I think both of them together then become a really irresistible, output for somebody to take you into the organization.
And related to that, because we're talking about kind of developing the T-shaped set of knowledge with the in-depth understanding of a particular technology as a specialist, but a generalist understanding of the entire field so that you know how to communicate and work in that with other people who are other specialists. But what are some of the other non-technical skills that you see as important in an analytics career?
So I think on the non-technical side of it, one, the art of storytelling is very critical. It's not just about great insights. It's also about being able to explain those insights well to your audience. And there are various ways of storytelling, right? There is deductive, there is inductive. So you need to know the audience to which you are addressing, and then accordingly decide how you want to run the story, right? Whether you want to do a slow unravel, or you give the output first and the recommendations first, and then you go into how you have come across it, right? So I think narrative storytelling is one large, non-technical skill set that is required. I think the other skill set that is required, and a lot of people actually don't pay too much attention to it, is relationship building. And I'll tell you why. I might be the best data scientist in the entire universe. But if my functional stakeholders do not trust me enough, I haven't built the right relationships, whatever I give as an output, if it is not adopted, it will not be impactful. And a lot of the adoption that you see of your analytical outputs are based on how much trust do you have in the entire environment that you function in. So I think those two are extremely key skill sets: narrative storytelling and relationship building, which are very critical to a successful career.
And I think that's going to take us to our last poll before the live Q&A. So if I may, as I said, it's similar to the last one, but in this one we're asking, what are the skills that you want to learn? We asked you before what you currently use. What would you like to add to your repertoire or your toolbox? And I'll leave this open for about a minute or so. And this gets back to your point, Abhishek, about the need to be broad and more generalist in your approach to complement your specialist knowledge of a particular technology or area. So let me go ahead. It'll be about another 15 seconds that the poll's open, so please get your answers in. Remember to hit submit. And in this case, AI and machine learning, the most popular answer, but still followed by data analytics. That makes sense. You'll bear with me for a moment. I will get to the live questions that we've been accumulating. And because of our audio issues, I'm going to have to mute you in between the questions while I'm asking a question, but then I'll unmute you. So a specific question for the industry: how does data science impact audit firms, and how can audit firms improve their audit quality using data?
Okay, that's a slightly different one. I think, look, audit is finally about. There can be multiple kinds of audit. So let me take a general stab at it, and let me see if I'm answering the question. You could have forensic analytics in audit. You could be looking at multiple frauds that are happening. You could look at transactions. You could look at how P&Ls are constructed. You could look at reams and reams of data about whether your accounts are reconciling with your loan management systems or your core banking systems, etc. So I think it is all about reconciling data, making sure that multiple sources of data are talking to each other and giving out the same output. So I think any audit essentially at the end of the day will always look at reconciliation, and therefore data analytics obviously plays a very large part there. Some of it may use the right tools in terms of models or in terms of standard frameworks, some of it could be ad hoc. But the structured problem-solving approach of reconciliation will always revolve around data always.
Question here, a couple of questions that are related about data quality.
Okay.
So how do you ensure data quality? And how do you make sure that data is unbiased?
Okay. So I think two parts to the question. One is with respect to insurance of data quality. So what I've always stressed on is where before you use any sort of data, your data store needs to give out a relevant report which looks at checks and balances, which looks at missing values, which looks at any values in the warehouse which are violating the norms that you have set for that particular field. And you need to make sure that you create a data score, a data quality score, which could be weighted on your mandatory parameters with a good to have parameters also involved in it. And what you then need to do is, after you look at the data quality report, you need to get the exceptions out. They need to go back to a data owner who then needs to work on that particular data set which is wrong, or data record which is wrong. It needs to come back into the warehouse. A new trailing data quality needs to get created. And then you need to compare whether that data quality is improving over a period of time. So I think having the right data, I mean, we have all heard, right? It's finally garbage in, garbage out, or your analytics insights are limited by the quality of data that you build those insights on, etc. So I think having a very standard and a thorough framework on data quality is unquestionably the bedrock on which any analytics team will work on. And there are multiple ways of ensuring that. By making it unbiased is one way, missing value fillers are another way, taking out the tails in terms of all the extremes, whether they be on the lower side or the higher side, that's another way of doing it. There are multiple techniques available. Sorry, Stuart, can't hear you.
I muted you for just the last second of what you were saying.
That's okay.
Okay. So we have questions here now from people who are in the field of studied commerce, are in the field of business or finance, and one of the questions is whether someone should have a degree in finance to become a data scientist in a finance-based organization, and the other is if you have an accounting or commercial background, how do you move into analytics for finance?
So I think whether you need to have an analytics degree or a quant degree, um, it gives you an advantage definitely, because I think it just teaches you a little bit of structure, right? So whether it be an engineering degree, whether it be a commerce degree, I think if you're familiar with numbers, if you're familiar with some of the econometric concepts, that obviously gives you a leg up. That said, some of the best analysts that I have seen have come in from pure economic backgrounds, IISCs and so on, right? Who are the best modelers in town, and some of them really pick up well on the business concepts also. So I think an MBA degree helps more from a rounding up perspective, that it allows you to understand business a little more, and therefore translate whatever is coming out of the analytics shop into the right business context. The degrees finally are just an additional leg up that help you get better at what you're doing. That said, some of the leaders in data science today, they haven't even finished colleges, right? So I think finally it's about whether you have the right structured approach to problem solving. And if you have that, I don't think anything else is really needed to kind of, push you up. But each of these degrees or each of these certifications give you certain skill sets or add certain skill sets to your repertoire, which help you succeed well. On the commerce side of it, I think, look, there is an entire piece on FP&A and CFO and financial accounting and financial analytics, which is a wide open area, and that is that demand, that skill set is hugely in demand. FP&A typically is one of the most exciting data analytics based roles that are available in any organization. Under the CFO, you typically always have one or two analysts who look at balance sheets and P&Ls, who look at what kind of XIRRs or IRRs the business is generating, looks at ROA, ROE, and whatnot, right? So I think, given that if you have a commerce background, you understand these terms. I think pick up some part of the FP&A, pick up some part of the entire CFO analytics pieces, and that could become a very easy, climb up for you for getting a good career into data and analytics on the financial side of it.
Excellent. An interesting question, and it has to do with running through an example of how your data analytics team decide which statistical modeling to use on a specific scenario. Can you maybe run through a quick example of how you do that?
Sure. So, I'll give you a different kind of an example. We typically had a lot of customers who came to me for a loan, but finally did not end up taking that loan, right? So if I have given out a million loans, I would typically have about 50 million prospects who would have approached me at some point in time, and for different reasons, I may have even underwritten them, but they have not picked up their loans, right? Now, as you create a re-engagement campaign, you now are starting with a funnel which is very large, and therefore your normal practices of running a random forest or even a XGBM might not remain as relevant. So what you would end up doing is using a Google Tesseract, creating some feature mapping to ensure that you understand what were the contours of that population. So given that the data is large, you accordingly change the way you are analyzing it to reach to a conclusion. And for example, when we utilized all this feature mapping in this particular case, we realized that literally 5% of this population is all that I need to target to get to about 80% response out of this. And I think, therefore, it is very relevant for you to look at designing your structure of the analysis right. So, create your problem statements that this is the problem I need to solve. Then look at which is the right and relevant technique to implement on that particular piece of work. Have your design conversations, and only once you're convinced that this is the right way of moving forward, you then start actually analyzing and closing out the problem. Good. Sorry, you were on mute. I couldn't hear you.
I'm sorry. At this point, I'd like to ask if you have final thoughts that you'd want to share with the audience to sum up. I'll turn it over to you.
Sure. So I think, look, this is a sunrise industry, and I think it will remain very relevant for a very long time to come. Over a period of time, what will end up happening is, and it's already starting to happen, that data and analysis has become a de facto skill set that people expect from any business leader. So, gone are the days when your sales guy had no idea of numbers or how they arrived at it, right? Now there is sales forecasting. People understand that, if I am on X day of a month, how do I predict where to get by the month end and so on. So I think data and analysis will become the de facto skill set. There will obviously be a lot more adoption of AI and ML. The amount of use cases and the relevant use cases for some of these newer technologies will continue to grow. I think what will also end up happening is all the all the historical ways of treating data, looking at data, as technology keeps evolving and newer techniques of analysis keep on coming in, uh, the adoptions will increase manifold, and you will start seeing a lot more dependence on automated decisioning rather than human decisioning. So that's where I see it going. And it will not just happen on the marketing side of it or the customer service delivery side of it. I think over a period of time, and it's already starting to happen, you'll start having a lot of automated decisioning on the acquisition or the getting the customer on the book side of it. Over and above that, obviously, you can see a lot of AI and ML coming through on chat bots. You go to any website, there are bots talking to you. You go to any shop floor, you have a whole lot of robots working on it, and therefore you'll see a lot of AI and ML coming through into a Mercedes Benz, for example. So automated temperature controls. There is IoT happening. Tomorrow I'll be able to switch on my AC before half an hour before I get home, and then very soon I won't have to do it every day. I'll just have to set an alarm, and automatically my ACs will come on, right? So I think it is going to become an integral part of our lives, and therefore the use cases will not just remain in the professional environment but also in the personal lives. And I think it's for the best, but at the same time, I think after all of that is said and done, nothing works better than a smile in the morning and saying hi. I think we shouldn't ever forget that. But I'm really looking forward to the right adoption of AI and ML in all aspects of life.
Wonderful. This has been a really excellent experience, and really thank you for your time. And I'm going to ask if you'd like to share uh, how people can reach you. And let me hold on a second. Yeah, go ahead and tell people how they can get in touch with you or link with you on social media.
Sure. I think I'm available as Abhishek Singh on LinkedIn India. So I think please drop a note, connect with me. Happy to answer any questions privately. You want to talk to me. Just dial me up on LinkedIn itself. I'm usually quite active on LinkedIn, so I think that would be the right platform.
Excellent. And we want to thank you again for joining us, and want to thank everybody here for being part of the webinar. Um, we have another webinar coming up 1 week from tonight, Wednesday, September 9th, a career management masterclass. How building a career is like building a successful startup. Our guest will be Tian Hari, who is the head of HR at Big Basket. And we hope you will all join us for that. We also have our methods for staying in touch with Simplilearn on the different social platforms, Facebook, Twitter, and LinkedIn. And we invite you to join with us. And thank you all. This is the end of the webinar. So I'd like to invite everyone to log off. And when you do, you should see a survey. If you would answer that survey, that will help us improve future webinars. Again, thanks everybody, and goodbye.